You're listening to AI Prism from Seoul Economic Daily.
If you're raising or exiting in Korea right now, two things just moved that change your math. Korea's financial regulator dropped a guideline last week that blocks subsidiary IPOs and caps parent company voting rights at 3% on any dual listing vote. Venture capital groups just filed formal pushback. They say IPOs account for more than half of Korea's VC exits, and this rule tightens that channel further. Meanwhile, a Seoul Fintech just proved something investors care about. Consumption data can predict credit risk better than banks assumed. The regulator votes July 29th, and that timeline matters if you're planning a raise or an exit this year. It's Wednesday, July 15th. Let's look at what this means for startups and entrepreneurs in Korea. The Financial Services Commission and Korea Exchange issued the dual listing guideline on July 6th, aiming to protect minority shareholders from repeated spin-off IPOs. Venture and VC associations submitted a joint response this week, arguing the rule was built for large conglomerates and ignores how early-stage companies raise capital. Separately, Bankalad partnered with Sogang University to test whether payment data, not just credit history, could flag default risk more accurately. Here's what the numbers show. The Financial Services Commission's July 6th guideline caps parent company voting rights at 3% on any subsidiary listing vote, a rule set for final approval July 29th. Venture capital groups told regulators that IPOs account for more than 50% of their exit volume in Korea, meaning fewer listings directly squeeze fund returns. Bankalad tested its new credit model against 200,000 card transaction records pulled from its own MyData platform. The model scored 60% on the KS statistic, the industry benchmark where 50% or higher counts as excellent predictive power. Bankalad's classification system spans 28 spending categories and 119 subcategories, feeding both the new model and its existing asset management tools. Regulators close public comment this month, with the final guideline vote landing July 29th, the same date that decides whether the venture carve-out survives. So, what does this mean for founders and investors evaluating Korea? Earlier, we said the exit channel just got tighter. If IPOs already carry over half of VC exit volume, any startup planning a Korea listing in the next year should build the 3% vote cap into cap table conversations now. On the funding side, Bankalad's model signals real investor appetite for alternative data credit plays, especially anything targeting Korea's thin file segment. Watch July 29th. That single vote decides whether the venture carve-out survives, and with it, whether Korea's IPO-heavy exit model holds for the next cycle. That's today's AI Prism. Founders. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.